What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 29th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we've got a very important Macro Monday special here on the channel, where we're going to be talking about why we have further conviction of a continued decline, not only from the short-term correction here on August 15th, but in the broader bear market correction following the recent speech from Jerome Powell from the Federal Reserve, further solidifying harsher monetary policy and therefore setting in a rocky environment for assets abroad. We've got a lot of things to dive into in today's video. Hope you guys enjoy this video. If you like it, consider dropping a like. Let's go ahead and kick things off. Now, I want to start off here before we dive into the technical analysis here for both Bitcoin and Ethereum. I want to come back here and talk about what happened last Friday and why it spooked financial markets. Now, back during the mid to early part of last week, there was a major event coming up, which was the speech from Jerome Powell at Jackson Hole. Now, essentially speaking, my understanding around these events is that they happen every half year, every once a year, where essentially the Federal Reserve chairman will come out and speak on behalf of the Federal Reserve as another kind of miniature event in between the FOMC meetings to share thoughts on monetary policy, broader economy, and really a year in review as to what's happened and what the Federal Reserve wants to reflect on. Well, usually the Jackson Hole speech, which has been given by a variety of other Fed chairmen in the past, usually is quite lengthy and sometimes a bit nuanced. This one was very precise and to the point. Jerome Powell emphasized steadily that the Federal Reserve is remaining course. It is not looking to pivot anytime soon, and that markets should expect some pain ahead as the Fed is utilizing every tool at its disposal to essentially cool down inflation. And that's another way of saying essentially that the Federal Reserve has to cool demand in the economy. We have not seen supply and demand equilibrium come back to the forefront. And that will be proven through a lot of the charts that we'll take a look at as we go throughout the video. When we take a look at commodities, when we take a look at the bond market, all kinds of different signs that are showcasing we have not cooled down to normal levels just yet. But let's go ahead and dive a little bit into crypto here for the sake of time and start off with what you guys really want to hear about. Now, as you all know, for the past couple of months here, as we've been having this recovery in price since back here in June, you all know that we emphasized that this was a relief rally, a short-term window where there would be some optimism in the market, people thinking that this is the bear market bottom, the sell-off is over. And while we don't want to discount the potential that it could be the absolute bottom, we talked about how there would be at least a period of consolidation, sideways pressure in price, where we don't really have a significant trend, and we probably come back down to those lows at least one or two more times. And we can see here, after having a failed ascending wedge here, many deviations beforehand, we had the breakdown here that we'd emphasized. We had our two lines here of a potential breakout or breakdown, and really focused on the next major shift here as we got up towards 25K. And now, as we are going into the next month, September, we've got a new layout of technicals that we're watching for here. We are short-term bearish at the moment on Bitcoin. And the reason why is because we at a minimum believe that if you're going to be making additional entries, we want to get down into that low range, back down to the previous lows, and have a very good chance here. I would not discount the idea that we've got not only a retest of lows, but potentially are going to go even lower than where we did back in June. And it has to do with what's going on in equity markets and all of our other macro charts, okay? So, first off here, the key thing we have to focus on is how previous short-term levels of support have now turned into resistance. That's point one. If we dive into the chart here, we can see that probably the most significant range of potential support where price should have bounced had been broken through the two previous times and has now acted as resistance, knocking price lower. So there are no longer more buyers at this range. There are more sellers, a lot of ask resistance on the order book. And on top of that as well, the 4-hour 200 EMA and MA support is broken. And while this isn't acting per se as resistance, until we're able to reclaim these levels as support again, this will be continuously a point for the bears. And last but not least, our short-term target here at a minimum for some potential relief for the bulls is around 18,800. Perhaps when we have a deviation below this level like we had seen historically, buyers might come in and swing prices back up to the upward channel here, providing some short-term relief. I think, though, that this is again a hopeful price point for the bulls here. Essentially, our goal here is for Bitcoin to continue coming down here to these lows, and at a minimum giving us an entry point here, or at least safe dollar cost average territory, with expectations that things could very well continue to go lower here. Let's go ahead and hop over here into Ethereum. Very similar trend here in price. We are starting to very clearly see that the 4-hour 200 EMA and 200 moving average, which was again acting as support back here in the past after acting as resistance back previously, yet again starting to act as resistance, knocking price down lower here. And as you all know, last month we talked about 1800 to 2000 being the range where we would start to take profits. And that's exactly where we started to see resistance in price, starting to take profits on that relief, that optimism going into the merge event. And if we go ahead, scroll up here, we're going to go ahead and talk about our upcoming bullet points for this coming month. So here on Coin Panel, which again, if you guys want to track our TA here, we utilize the tool here on our Macro Monday specials as it focuses on our really big TA thesis for the next coming weeks. If you guys want to track this real time when I make these changes, you guys can definitely check out Coin Panel. I'll leave a link down below in the description. You can get about 20% off on your first month. But the key thing here is that we are showing sentiment of short-term bearishness here going into the month of September, and there's a few key reasons for this. Not only are the EMAs acting as resistance like we talked about, but on top of that, we are continuing to see a steady decline in ETH's price. The ETH to BTC ratios are failing, and we think that it's very fair here that we can get down to 1250 here. When we just take a look at the price here, the trend is clearly switched from an uptrend of higher lows and higher highs to a downtrend, lower highs and lower lows. And this does not show any signs here of slowing down. We're not able to turn these moving averages into support. And that would be what you want to see for the bulls. The reason being, it was at a perfect range here where there was previous support in the past. And hopefully, if price could have held here, we could have potentially moved higher. But it just doesn't seem like price has any serious buy-side support. There's no follow-through here for the bulls at this price range, plain and simple. And if we take a look at Bookmap here, one of our other partner tools here, we will see further confirmation of this. If we dive into Bookmap here, go ahead and pull up the chart. We can see the market order flow here. We had a lot of market buy-side pressure here on the cumulative volume delta. And while that looked great on paper, price, if you can see here, we'll go ahead and expand the actual chart here. We'll see here, essentially, that there wasn't a lot of price movement to the upside. It was generally keeping here at around 21,500. And this means essentially that as the CVD was moving up here and price was keeping neutral, that there was a lot of ask resistance on the order book. Essentially, anytime there were people FOMOing in, buying at the best available price, thinking that this was going to be the breakout point for Bitcoin, there was a plentiful amount of Bitcoin on the order book ready to be sold at those levels by some investor or holder in the market. Who is that? We don't know exactly. It could be multiple participants. It very well likely is multiple participants. But we are at least sensing right now that there are at least 1 to 3 major players in the market that are not letting up, that are continuing to leave major amounts of Bitcoin on the order book when they sense high cumulative volume delta or market order flow. Essentially speaking, until we get rid of these sellers, until we have enough market buy-side pressure that can really break through here, we are going to continue to follow the CVD and see what happens here as well. When we get a decline in the CVD, there is not that same type of buy-side support. Bitcoin's price starts to collapse here, declining over $1,500 here in this correction alone. So this is very, very telling here, and it's why you guys should definitely check out Bookmap, utilize that cumulative volume delta, and on top of that, utilize its unique features like multi-book that allow you to see aggregate liquidity across a lot of different exchanges. But if you already use any of the derivatives pairs, I definitely recommend you guys use the Binance Futures. It's one of the most liquid here. But again, we can see while cumulative volume delta is starting to tick up here, price really isn't making that much of a significant move here. So again, until we can really start to see a major breakthrough where we start to clear through ask resistance on the order book, the bears are in full control here. And that is further proven here by the breakdown on the upper band of previous support that was previously serving as resistance. As we clear through here on a decline here on August 26th here, think back on Friday, we saw that dip down The Fed spooked the markets, and now Ethereum is hanging by a thread here. The next level we're going to be looking for here for the ETH to BTC ratio is for it to come down here towards its previous 200-day EMA and MA bands here around 0.068 on the ratio. We are currently at 0.074, so a pretty significant decline here for the coming days. That would be my area where I potentially look for entries as Bitcoin and Ethereum likely charter down back towards their bear market lows to see whether or not there's enough optimism and enough appetite for bulls to come in and provide support around that range. We've got to see what happens here. But I want to go ahead and talk about the macro picture here to close things off, guys. Take a look at the US 30-year yield, still holding up here. I will say we're not seeing a significant trend higher. So one piece of good news is that from the recent speech by Jay Powell or Jerome Powell, we are not seeing in the bond market any pricing in of further exacerbations in rate hikes. So it seems like while the probably the worst case scenario, which would be the Fed, really like clamoring asset markets by going up 100 basis points or something ridiculous like 120, 150, which is just really honestly out of the cards. There's no reason for that. The Federal Reserve is staying on pace. It's basically been in the same course of action that the bond market has been pricing in since as far back as May. And while equity markets and crypto started to detach from reality, they started to bet on the overtly optimistic scenario, we are seeing that the bond market and even the dollar index here, roughly speaking, are continuing to charter on and bet on the Federal Reserve continuing to hike by 75 basis points. They are on a slow but steady pace here every couple of FOMC meetings, every couple of months, to continue increasing the federal funds rate towards a target rate range of, I think, around 3.5%, if I'm not mistaken, basically to cool down inflation and cool down consumer demand in the economy. And again, the dollar index is further proof of this. While we are seeing a little bit, and I'll talk about this when we talk about oil and natural gas, while we are seeing a bit of top-heavy kind of price action or moves on these indicators, we are still not seeing any let up here until we see a major decline here down lower. Any further signs that the Fed is really ready to pivot, these are likely going to continue to tick higher or remain at their elevated levels. Now, let's take a look at the commodities here. These are really what's driving inflation in the economy, energy-based commodities. We are still back where we were back in mid-July. For about a month and a half, we have been neutral here, roughly speaking. And this means that due to the fact that we're still holding up in this range, inflationary indicators cannot decline significantly year over year. If we take a look as well at natural gas, still holding up at the highs, matched out here to June of 2022, around 9.4 here per contract for difference. This is a major telling sign here that inflation is likely not letting up. If you guys have been watching energy prices in Europe, it's astronomical. Now, of course, if we're talking about the United States, the dollar, and the cost of goods and services in the U.S., it's a bit of a different picture, right? But we can see here that, if you guys have probably felt it depending on where you live, while prices at the pump have maybe gotten a bit cheaper, your electricity bill is likely staying very close to the same levels you've been paying, and it's still highly elevated comparative to the increase in incomes in the economy, meaning that we have still got a long way to go before things are going to get better. And as Jay Powell said at this recent meeting, we should expect more pain. The Federal Reserve is, and I gotta be honest, I know a lot of us have a negative opinion of the Federal Reserve. The Fed is doing exactly what it needs to do from a monetary policy perspective. It is increasing interest rates. It is considering and already beginning slight reductions of its balance sheet. In fact, I would say that a shock and awe of a 100 point basis point hike would probably be the best thing the Fed could do. And it could get us towards the point we need to get to sooner rather than later, weakening the potential the potential damage that this is going to cause in the economy. It would be best to be a shock and awe, basically put the economy into a temporary dip in recession, cool consumer demand in the short term, and bring us back to equilibrium. But the Federal Reserve is still doing a pretty good path. They are sticking the course here. They are cooling inflation. And I think that the Federal Reserve realizes they need to do this because they want to maintain dollar supremacy on the world stage. They want the dollar to be the key reserve currency of the world. And this is the Fed's best opportunity to guarantee that and bring down global demand and equilibrium towards consumer pricing. This is what the Fed has to do if they want to do the right thing. And I'm very happy to see that they're not pivoting. My cynical side said they possibly would, but I got to say, we're happy to see that the Federal Reserve is sticking to course here. And it basically means, good news is, we've at least got a minimum chance to likely see Bitcoin and Ethereum and a variety of assets come back down towards their bear market lows, potentially even lower, giving us some really great entry points. And as many of you might recall, as we talked about before, something that we've dived into quite extensively and we will continue to talk about has to do with the FANG stocks and how we believe that there is a further discount opportunity in a lot of the technology companies that are going to drag down equity markets and are going to likely bring down Bitcoin and Ethereum with it, giving us some really great entry points that we generally don't get during bear market corrections. So if you guys are interested in learning about those calls and what we're watching for, not just here in crypto or equity markets, but also in commodities and Forex on a deeper level, definitely check out the Dash report down below in the description. You guys can go to nicholasmerton.com/dash report or just simply take a look at the link down below in the description and you guys will get 20% off on an annual subscription. It's a great way to support the channel, but you guys also get even more in-depth knowledge from what we talk about here on our Macro Monday specials and our general content here on the channel, as well as my trade calls when I make trades in the market, as well as a variety of market updates where we go even deeper from these Macro Mondays into some of the nuances in what we're doing in the market. Anyways, guys, that's it for today's video. I hope you all enjoyed this one. If you liked it, drop a like, consider subscribing, and hit that bell icon. Share it with family or friends. But until the next one, I'll see you all in the next video. Take care, everyone.